With the market's current high valuations, it's more important than ever to focus on investing for the long haul while sticking to your game plan. You can opt for very safe options such as a certificate of deposit, CD, or dial up the risk and the potential return with investments such as stocks. Here is the list of top 10 best investments in 2022. Hello and welcome to the Smarts Money's Dollar YouTube channel. So before we get started, make sure to hit that like button. Subscribe to our YouTube channel for our future updates. Number 1. Growth stocks. In the world of stock investing, growth stocks are Ferraris. They promise high growth and therefore a high return on investment. Growth stocks are often technology companies, but they don't have to be. They typically put all their profits back into the business, so they rarely pay dividends, at least until growth slows. Buying individual growth stocks requires careful analysis of the company and can take a long time. Growth stocks are also highly volatile, so you should either have a high risk tolerance or commit to holding the stock for at least 3 to 5 years. Number 2. Stock funds. Equity funds contain a collection of stocks, often organized by a particular theme or classification, such as stocks. B. American or large cap stocks. Investment firms charge a commission for this product, which can be very small. Equity funds, ETFs or mutual funds, are a good option if you don't want to invest time and effort into analyzing individual stocks. Equity mutual funds are an excellent option for investors who want to be active in stocks but do not have the time or desire to invest as a hobby. Number 3. Bond funds. A bond fund, either as a public offering fund or as an ETF, contains many bonds from various issuers. Bond funds are typically categorized by the type of bond within the fund, bond maturity, degree of risk, issuer, corporate, municipal or federal, and other factors. When a company or government issues a bond, it agrees to pay the bondholder a fixed amount of interest each year. At the end of the term of the bond, the issuer repays the bond principal and the bond is redeemed. Bond funds are suitable for investors who want a diversified portfolio of bonds without having to analyze and purchase each individual bond. It is also suitable for retail investors who do not have enough money to buy a single bond that normally costs close to $1,000. Also, bond ETFs can often be purchased for less than $100. Number 4. Dividend stocks. Dividend stocks are sedans while growth stocks are the sports cars of the stock world. These can generate solid returns, but they probably won't rise as fast as growth stocks. Dividend stocks are simply stocks that pay dividends, regular cash payments. Many stocks offer dividends but have a lower need for cash and are more likely to be found in older, more mature companies. Dividend stocks are popular with older investors because they provide a steady income, and the best stocks increase their dividends over time, giving you more returns than fixed payouts on bonds. REITs are a popular form of dividend stocks. Dividend stocks are suitable for long-term buy and hold investors, especially those who want below-average volatility and enjoy or need cash payments. Number 5. Value stocks. Many stocks stretch their valuations when the market goes up sharply. When that happens, many investors turn to value stocks to be more defensive while earning potentially attractive returns. Value stocks are stocks that are undervalued in certain metrics, such as the price-to-earnings ratio, which is a measure of how much an investor pays for each dollar of earnings. Value stocks tend to grow faster, as opposed to growth stocks, which tend to be more highly valued. Value stocks tend to do well when interest rates rise, so they could be an attractive option in 2022. And the Federal Reserve has been raising interest rates at a breakneck pace this year. Number 6. Target date funds. If you don't want to manage your portfolio yourself, a fixed date fund is a good choice. These funds become more conservative as they age, so your portfolio will be safer as retirement approaches when cash is needed. These funds gradually shift their investments from more aggressive stocks to more conservative bonds as their target date approaches. Target date funds are a popular choice for many workplace 401k plans, but they are also available outside of these plans. You choose your retirement year and the fund does the rest. Number 7. Real estate. In many ways, real estate is the quintessential long-term investment. It costs a lot of money to get started, the commissions are very high, and while you can often benefit from holding an asset for a long period of time, it is seldom only for a few years. A survey found that real estate was the most popular long-term investment for Americans in 2022. Real estate can be an attractive investment. One reason is that most investments can be borrowed from the bank and repaid over time. For those who want to be their own boss, owning real estate offers that opportunity, and there are many tax laws that benefit property owners in particular. Real estate is often viewed as a passive investment, but when you rent a property, you may need to take an active role in managing it. Number 8. Small cap stocks. Investor interest in small cap stocks, which are shares of relatively small companies, is primarily due to their potential to grow rapidly and to benefit from emerging markets over time. In fact, retail giant Amazon started out as a small cap stock, making the investors who really stuck with it very wealthy. Small cap stocks are often growth stocks, but not always. Buying individual stocks takes a lot of work and analysis, but small caps are a great place to find stocks that other investors have missed. But these little fish tend to be much more volatile than the big, established companies, so investors should have an iron stomach. Number 9. Robo-advisor portfolio. With a robo-advisor, you'll simply deposit money into the robo account, and it automatically invests it based on your goals, time horizon and risk tolerance. The robo accounts typically cost around 0.06% to 0.15%, or $6 to $15 per $10,000 invested. They're a great alternative if you don't want to do much investing yourself and prefer to leave it all to an experienced professional. Number 10. Roth IRA. A Roth IRA can be your best retirement account. You can save money with after-tax money, grow your money tax-free for decades, and then withdraw tax-free. Additionally, this money can be passed on to your heirs tax-free, making it an attractive alternative to traditional IRAs. A Roth IRA is a great way to earn income and accumulate tax-free assets for retirement. That brings us to the end of this video. What do you think of our video? Let me know in the comment section below. Leave a comment saying I subscribed and I will personally reply your comments. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching. Do you want to learn how to make money online? Click on the links in the description below, and I will personally show you how you can make money online fast and easily. Click on the links now.